Coming to you from sunny Orlando, Florida, welcome to the Paperstac podcast, where we cover current topics in the note industry, give you tactics for your note business, and talk with industry leaders to make you a better note investor. And now, your hosts, Brett Berkey and Rick Allen.
Hey, welcome back to the Paperstac podcast. Rick Allen, Brett Berkey here with another edition of my first note purchase. So excited today. We got somebody who's been on the platform forever. I've met Marco several times. I think he's been in the industry basically since I started. I knew of Marco.
Oh, yeah?
Yeah, for a long time. Marco Bario, thanks for joining us, man. How you doing?
I'm terrific. How are you guys doing?
Good.
Doing good. It's bright and early where you are, right? 8 a.m. California?
It's not. I'm sitting in Maryland right now. These days I go back and forth between LA and Frederick, Maryland.
Okay.
I've got some personal and soon-to-be business interest here, so I split my time.
That's fantastic. How do you deal with the
Time change.
the time changes back and forth?
Usually I spend a couple of days where I stay on California time, and then I rip the Band-Aid off and get up early one morning. So the big achievement this week was I joined the Y
There you go.
Urbana, which is part of Frederick, and I got up at 5 the last 2 mornings to go work out. So
That's
I
good.
ripped that was me ripping the Band-Aid off pretty hard.
Yeah, it's pretty hard.
That is pretty hard. How long have you been? Were you in California at all for the hurricane that blew through Hillary?
No, I missed the hurricane and the earthquake that happened on the same day.
Yeah,
I
it
was
was.
in touch. Both of my brother and both of my kids. I was in touch with them, but it was very exciting.
So tell us a little bit. How did you get in the industry? What's your background? Where'd you come from? When did you start? And then we can lead into your first note purchase.
Yeah, my background before real estate and anything to do with it, I don't have a background in real estate at all. Is I worked in film and television in Los Angeles. I moved out there in the early 90s, and I started working on television shows in the production office, worked my way up, a lot of scripted TV, and then I did that for a number of years, and then I moved into working for a big company called Technicolor, and eventually became an executive with them, and I oversaw our theatrical post-production pipeline on the digital side. Technicolor was 100 or more years ago invented color film, but as I was starting up with them, we were starting to do digital finishing on feature films, which is the norm now, but it was pretty bleeding edge at the time. So it was a really exciting time, and I got to work with a lot of really exciting filmmakers and studio executives and on a lot of different projects. But I changed gears in around 2015. That industry was changing, really victim of Moore's Law, because the technology that we pay $1 million per environment to build out was now more or less available on definitely a desktop workstation, in some cases a laptop workstation. And also it was happening all over the world. It wasn't those huge checks to build out those environments and bring in those talent. So it got really competitive, and at that time it was time for me to reinvent again. I wanted to do something more entrepreneurial. I'd had some entrepreneurial exposure in that world. Actually, those were the first times I had to worry about P&L statements and actually generating revenue, not just spending a production budget. And I got an itch for it. Among other things, I had a little e-commerce business, which just taught me a bit about running my own little thing. And I started going to some real estate meetups, and one of those was a panel of note investors. And I thought it sounded really interesting, and I decided to go down that path.
That's pretty cool.
Wow,
That's real cool, actually.
That is a pretty interesting background.
And when you said Technicolor, I was like, Technicolor? Yeah, everyone knows what that is. It's pretty interesting. Wow.
Yeah. Sadly, it doesn't exist anymore. The final piece of Technicolor was bought about 2 years ago by another company, and I questioned the logic, but they retired the brand.
Wow.
I must be the one that doesn't.
There near the end.
I must be the one that doesn't know because I've never heard of Technicolor.
You'd know it if you saw it. They had the logo that was almost like a circle rainbow type looking thing.
Yes, and it came spun through with the star that would.
I don't know about that. You might know better than I did, but yeah, I do remember the logo.
You went to a meetup. You started just tinkering, thinking about real estate. You saw a notes panel. Do you remember who was on it? Anybody that's still in the industry, or was it just a random?
Yeah, you guys know Gerald Des Moines, right?
Oh yeah,
of course.
Yeah.
Yeah. So I'm in Southern California. I was 100% in Southern California at the time. And Gerald's a Southern California guy. There was a meetup I used to go to down in, I call it the South Bay, but Redondo or Manhattan Beach, El Segundo area down by LAX airport.
Mm-hmm.
And that night, Gerald was on the panel and a few other investors who aren't as active in our area of the note space, but definitely knowledgeable about notes. But Gerald was talking about buying non-performing seconds. And was really interesting to me. It was really interesting to me. I'm definitely, we'll talk about this a little bit with my first note purchase as we transition into that, but I'm a get knowledge, but then really solidify it by getting my hands dirty as a person. And those non-performing seconds, the way Gerald described it, it was like, gee, this is how Houdini would have somebody lock him into a box and handcuffs and chains and drop him into a tank of water. And I'm sure he had some idea how he was going to get out, but you never, certainly as the audience, you never really knew how he was going to get out. And I thought that type of learning was appealing to me because I had to get into title and I had to get into property and I had to get into all these different outcomes and the borrower. And I figured each one would be a little bit different and I would learn from each one of those touches, right?
Sure.
And that's really what it was most appealing. It wasn't the big dollar signs. I think there are a lot of different areas in real estate to make big dollar signs. But it was, I felt that I could get more reps and be stretched in a lot of different directions and learn faster, having no real estate background.
That makes sense.
Did you seek out any sort of like professional education, go to anybody, or did you, oh, so you did, okay. Where did you go with Gerald, or was there somebody else you?
Gerald used to host meetups in Orange County, which is the county south of Los Angeles County.
Yep.
And I did attend those while he was still hosting them. And that was a commitment because in rush hour traffic, to get from where I lived to Gerald's place, his office, he would host them at, was a good 2 hours.
Holy cow.
But he in particular was generous with sharing how he ran his business and the intricacies of how he sourced the notes and how he dealt with certain situations. I learned a lot by attending those, so it was well worth it. I don't know, he charged $10 and he gave you a piece of pizza and a soda. It was the cheapest dinner and the most educational dinner I could ever go to.
That's awesome.
Yeah.
Kimberly Banks Fawcett and Liz Broomer. At the time, a guy named Chase Thompson had an educational program. That was the first one I ever signed up for.
Chase and Robert Woods.
They had a note investing university or something like that.
Those three together had, I think Kimberly may still run it. But that was among the first. And there's so many great podcasts such as this and books. And Dave Van Horn used to do a monthly call where you could ask me anything type call. It's just such a generous community and there's so much information. And at the end of the day, I'm not a proponent of spending $20,000, $30,000 on a mentoring program. I'm a proponent of learning the basics and doing what I did, just getting yourself into some deals and learning the other pieces that way.
Perfect. So 2015, you find out about it, or 2016, somewhere in there. When did you buy your first note? Walk us through that.
There you go. So I bought my first note October 25th, 2017. That was the date on the assignment. So let's go with that. And it was also connected to that real estate meetup that I went to. I used to go to this group. They're still in existence, called For Investors by Investors. They have a few locations in Southern California. And the guy who runs the chapter that I went to and used to run one other is Matt Owens. And he had a big business that he built, Southern California guy, but a big business he built, as far as I know, he still operates it. It was turnkeys in Memphis. So he would find properties, he would renovate them, and he would sell, and he would put tenants in them, and then he would sell those to investors. And then at the time, his company, another division of his company in Memphis, was handling the property management.
Okay.
So when he would sell to the investors, very often he would carry back the paper. He'd sell or finance those.
Nice.
And then he'd collect an origination fee when he'd create those notes, and then he'd sell the notes off to investors. By this time, I knew Matt well enough to know that he was the kind of guy who, and this is not an endorsement of any one investor or source of notes, but I think this is important for somebody just getting into the business, is to know who you're buying from. Matt had deep pockets and was the kind of character, has the kind of character I believed, and I still believe, who would step in if something went south and say, hey, how can we make this right for you? I know this didn't work out the way you said, and of course there's no guarantees and nothing's in writing, but he's just the kind of guy who would help a guy out. I felt comfortable buying from him, and my goal on the first deal wasn't to make a lot of money. It was, gee, I bought a house before. I live in the house that I bought. I lived at the time in that house that I bought. So I bought real estate, but I've never bought paper before. And I just wanted to go through the reps of doing that again. It's just touches and reps, and that's mostly how I've learned. Besides, I still take education, and that's concepts, but really doing is the best learn. Matt had these notes available. He sells them at par. I don't tell anybody I bought a note at par, but I did. But it was worth it to me. So the terms of the note were this. He created a note. I don't know what he sold the property for, but the starting balance of the note was $62,500. It was a 3-bedroom house in Memphis that Matt's company had put a new roof on. And they really fix them up for these turnkeys so that at least for the first 10 years or so, you shouldn't have to worry about HVAC systems or roofs or anything major. So I knew the house was in good shape. It was generating rental, and I had all those numbers. But it was at 7%. The payments were $725 and 68 cents a month, and at a 120-month term. A real simple note. And when Matt creates these notes, his company collects the payments. They perform the servicing. They used to. He sold all this off, and charges a $15 a month fee. So I had to wire Matt. So 4 payments have been made. Matt's company. 4 payments have been made, or 116 remaining. So I bought a balance of $61,042 and 93 cents, and I paid $61,042 and 93 cents. Those numbers are pretty simple. And then he gave me an assignment and a launch, and most importantly, walked me through, here are the documents I'm going to send you. And again, this is somebody I trusted, who I learned from and felt comfortable buying from. I know there's always risk. And everything went as I expected. The most boring transaction maybe anybody's ever told you about for a first note, I don't know. But it was interesting to me because I learned about buying paper.
What was the rate?
Day, I think it's
7%.
7%.
Okay. So it was, and this is in 2017, October. So 7% was, you're like, hey, 7%'s good. Let's learn it and see what happens.
Yeah, you know what? It could have been 4 or 5. It didn't really matter to me. I got to make a little money. It was a seminar that paid me money, essentially.
That's how it works. That's exactly how it works. Do you still own the note, or did you end up selling it?
I sold it. So it was in my retirement account. I have a solo 401k, and that's how I got into investing. I'm not somebody who takes on investor money, and I still wasn't then, and I still don't. But I converted a retirement stock account, into a solo 401k attached to a business that I had at that time. And so I bought it in my 401k, and I collected a total of 65 payments. And by that time, the balance was paid down to $46,194. No, I'm sorry. The balance was paid down to $41,105. I'd collected $46,194. For those 65 payments I collected net after the servicing fee. And I thought the balance is getting smaller. I know how to make a little bit more with my money by then. And I was and still do a lot of business with First National Acceptance. My primary business now is buying and wholesaling or holding some seller finance notes. I market to mom and pops with seller finance paper. I'm pretty busy in that space now, but I'd never been, it was another opportunity. I thought, well, I'll learn on the exit from this one as well. I'm in the middle of a lot of transactions with First National Acceptance. They're wonderful to work with. But I've never been on the selling end with them. So I thought, what the heck? I'll just sell it to them. I know their pricing is fair.
Yeah.
And I know they'll close and do what they say they're going to do. And of course they did. So I sold my $41,000 balance for $37,300.
Okay.
And they bought the rest of the note.
That's perfect. Yeah. So really boring, but you know what? When you're buying your first note, boring is always good. That's what I say. If it's the first one, boring notes are great just because you're getting the reps. It's funny you say that, and I'm a big believer in it's, hey, I got into it by doing the same thing. I actually didn't even get the education. I understood. I just looked at it and said, I know I can't really lose on the price that I'm paying for this. I'll figure it out. But then the more reps you can do, the more you learn, the more you learn, ideally, the stronger your return should become.
Makes sense.
So you're now, it sounds like, heavy into the seller finance space. Are you originating seller finance, or you're just marketing for the seller finance stuff, turn around, either buying them or turn around and then just brokering them?
I market to mom and pops. Most of the people I buy from have created exactly one note in their whole life. They lived in a property more often than not, and they sold it, and they carried back the paper for whatever reason. And they reach out to me at a time that they want to move on from it. Someone's passed away, they want the money, they're tired of collecting payments.
Are you new to the mortgage note industry? Have you been wanting to learn the step-by-step process to purchase your first mortgage note? Well, you're in luck. We've convinced our CEO, Rick Allen, to break down everything he knows about mortgage note investing. Through a series of 50 videos, you'll get everything from start to finish of where to purchase notes, how to purchase notes, and all of Rick's investing techniques he has developed over the many years. From performing note tactics to non-performing notes, Rick gives you everything he knows about investing. Bonuses include our glossary of industry terms, Rick's own proprietary calculators he created to evaluate notes, discounts from our partners, our Rolodex of vendors, a private Facebook group, along with a lot more. We've packed so much content into the Academy to take you from beginner to expert in no time. To learn more about the Academy, go to academy.paperstac.com/welcome. Again, that is academy.paperstac.com/welcome.
You're marketing to mom and pops, and they call you when they're ready to move on and they don't want to hold the paper anymore.
That's right. Yeah, the various reasons. Somebody's passed away, or someone's inherited a note, and the siblings are splitting a $500 a month payment 4 ways. They're like, what would you give us for this? We don't want to do this anymore. A lot of different reasons, but it's just some version of people are ready to move on.
I don't know if there's a secret sauce to the marketing. We did some marketing for some owner finance stuff, and it seems like it was, we tried the texting stuff, the mailers, and it's just, that was it. The texting worked a little bit, but the return for the cost wasn't really there. So we ended up doing it. I ran into the problems was a lot of these people, surprisingly, they don't know what they're holding. When you say I need copies of these documents or that documents, to do it on a really large scale to where you're pumping out, say, 20 or 30 of these a month, it is just tough. And maybe we just weren't doing, or getting the payment history, the documentation. That stuff was like, you really had to be, look, I'm focused on doing maybe 3 or 4 of these a month as opposed to 30 of them, because we were trying to do something on a scale. And I thought that was really hard. Maybe your experience is something different, but is that just for people out there who are thinking about doing the marketing?
It's a lot of work.
It's a lot of work.
Yeah. We did have a really interesting time where we called one guy, and he gave us his number right away. It was a funny story. 70. And I was like, what was he talking about? 70? He didn't know what the property was worth. That was the interfamily transit deed.
Yeah. We've had some, but have you experienced anybody? We came across a couple people that they didn't have one. They had like literally 70 of these things, which was my experience. Happens in Texas a lot.
Texas, yeah.
People in Texas seem to have more than.
I talked to a gentleman yesterday who has quite a few, yes, in Texas.
Yeah, so it's you end up bumping into him. I wonder if it's the same guy that we talked to. He's an older gentleman, but he had quite a bit of these. He was looking to retire so he can go travel the country in his motorhome with his wife. That's good.
You guys know anybody? I talked to somebody else from Texas yesterday, and he holds a portfolio of home equity investment paper. In other words, the companies that kind of sprung up during the last real estate cycle, and they wanted to invest in the equity in your home.
Yes.
So we'll send you a check, and you won't have to send us any payments.
Mm-hmm.
But if you don't sell your place or refinance in 10 years, then you're going to have to cash us out. So they participate in the equity appreciation of your home.
Yes.
This guy holds a portfolio of those.
Really? That's interesting. I've seen a bunch of and heard a bunch of advertisements for that exact type of thing going on right now still.
I had a conversation with somebody on Monday or Tuesday about that thing, and I guess Moody's is about to do something, give it a rating or do their first securitization of it, and then I think that's going to like really make it
set a bar and
yeah, because I think what did he call it? He didn't call it. It was the same thing, but he's like this could be the next big
equity.
Kind of
it's basically an equity participation agreement
because they're not selling because they can't you can't go buy a new place or whatever.
It's in the traditional sense that people know, it's stocks versus bonds. Bonds,
Right.
you buy a return. Stocks, you buy equity in a company and hope that it goes up rather than down.
That's a good way to look at it.
So
they're just having the benefit of a lot of the marketing message I've been seeing is they're certainly targeting people who have a substantial amount of equity in their property that have fallen on hard times for one reason or another. And they are targeting just that. You'd be crazy to do something that's even remotely close to having no equity right now, or even, in my opinion, 15%. Who knows what's going to happen on the market?
my preference, through my marketing, I end up talking to a lot of different people, and some have a situation, if you will. And I like to offer to buy an option on their property rather than go on title as an equity holder. The option's a really strong position to be in. If they've got say a $10,000 tax problem, and I can take care of their property taxes in exchange for an option that I can exercise sometime in the next 10 years or 20 years or whatever we can agree on, that's a great situation. I hold that option. I can sell it like any other type of paper.
That's interesting.
And so there's a gamble. I want the investment to be smaller, but it's a huge leverage position. It's almost like buying seconds. For a small investment, I control a really large asset.
That's really cool. So you just say, look, I'll buy an option on the property, and then you record. I assume you record the option and.
Yeah, I record options with a deed of trust or a mortgage.
Okay, so it's
title. The deed dogs, if you will, the people who search for the title company. Well, sometimes they'll go past an option. This is what I've learned from a lot of different people more experienced than me. So the recommendation is people like Pete Fortunato or Bill Cook or some of the people who talk about this a lot. Record a deed of trust or a mortgage, they won't go buy that.
Huh. Interesting.
And yeah, that is interesting. That's a whole other topic.
That's a whole other. Yeah, don't be surprised if you get called back on to go and dive down that rabbit. Give us some advice. Give some of the users some advice, or the listeners. They're looking to get into the space. They're just new into the space. What's some advice from Marco Bario on, hey, you're starting out. What should you do? Action items, stuff along that lines.
It's the most important thing, and I talked about it a lot, is to get to know people you'd be comfortable doing business with. Somebody really experienced, and I was honored this person reached out to me also yesterday. He was looking at a totally different type of investment, not notes, real estate related, but not notes. And this investor said, does this look too good to be true to you? A, and B, do you know anything about the people who are offering it? And in fact, started investing in real estate. My first investment weren't notes. They were in some real estate syndications. And the people I also through this For Investors by Investors group, there's another gentleman there, one of the founders, Jeremy Roll, who specializes in investing in syndications. And he teaches a lot about the due diligence. The most important thing is you're investing, especially syndications, are when you send money off to somebody and they're going to buy a big apartment complex or a self-storage facility, and they're going to run it, and they're going to make all the decisions, and you're just along as a limited partner. Limited partner means you have no say in anything they do at all. And the most important thing to realize is with any investment, you're investing in the people who are your counterparties. Yeah. That's your first gamble that you're making. That's the first investment. So that's why I felt comfortable to invest with Matt. Again, he struck me as a guy, a little bit of get to know the guy and be around him and talk to other people who've done business with him, but a little bit of my gut instinct as well. He struck me as somebody who would make it right. We never had to do that. Everything went as we hoped it would. But that's the most important thing. At conferences, when you can get back to going in person and shaking people's hands, having a bite to eat with them or a cup of coffee, get to know people, talk to other people who may have done business with them, see how much they give back to the community, this great notes investing and real estate community that we're in. The people who are out there usually not overcharging for seminars and not overcharging for their time, just, hey, I want to give back to the community because I want it to be a strong and ethical community and propagating all that. Those are the people to look for. The knowledge will come. People will answer your questions. There's no problem finding the answers and the information.
Yeah,
That's good.
It's almost knowing the questions to ask to get those answers, right? And I think you said it perfectly. If you get a foundation and then you get in there and start mixing it up with the reps and you start getting, buy an asset. And then the questions will open themselves up to you. But if you can know the basics on what you're looking for and how to run some basic due diligence, and you know that you're not buying a complete bomb right off the rip, you'll figure out the right questions to ask.
Yeah, that makes sense. The unconscious and competent, that whole.
Yeah. So, Marco, thank you so much, man. I appreciate it. Where can we see you? Where are we going to bump into you? You have any events on the schedule? Anything planned?
I just signed up. I'm going to go to the National RIA convention when is that? The beginning of November.
Mm-hmm.
Unfortunately, it's the same weekend as Note Expo.
Oh wow!
Yeah. So those two conflict. Last year I went to Note Expo and I missed this, and I really do want to go to this. I know that Tracy Z is going to speak at the National Real Estate RIA convention this year.
Really?
She's a mentor of mine. She and her husband Fred are mentors of
cool.
mine, and I'm looking forward to seeing her there. It's a wonderful group of people who put that on. Vina Jones-Cox puts that event on. If anybody has a chance to check it out, she brings in some really great speakers.
All right. We lost Marco there. Sounds like he's going to be at the National RIA, and he does have a newsletter that he puts out.
He does, every Sunday.
I would recommend getting on that.
It'll be in the description below.
Yep. Really great talking with him, Marco. We appreciate it. And we will have a new guest coming up shortly. I'm excited about the lineup.
Yeah,
and what we've got coming. All right, we'll catch you on the next one.
See ya.
Are you new to the mortgage note industry? Have you been wanting to learn the step-by-step process to purchase your first mortgage note? Well, you're in luck. We've convinced our CEO, Rick Allen, to break down everything he knows about mortgage note investing. Through a series of 50 videos, you'll get everything from start to finish of where to purchase notes, how to purchase notes, and all of Rick's investing techniques he has developed over the many years. From performing note tactics to non-performing notes, Rick gives you everything he knows about investing. Bonuses include our glossary of industry terms, Rick's own proprietary calculators he created to evaluate notes, discounts from our partners, our Rolodex of vendors, a private Facebook group, along with a lot more. We've packed so much content into the Academy to take you from beginner to expert in no time. To learn more about the Academy, go to academy.paperstac.com/welcome. Again, that is academy.paperstac.com/welcome.